Dear learner or students, all of you in Kundu sir online classes. Class is scheduled for accountancy, class 12, topic shares, that means shares of companies, that means share capital, and period number is 15. There are two problems mentioned here. It is problem number 1 and problem number 2. First of all, I am going through the problem. Shamlal and Company Limited issued the following shares on 1st April 2020. 1500 shares of rupees 10 each to Mr. C. Patil, the promoter of the company, without any payment. First, promoter means the person or the person. Those are taking, the persons are taking initiative for the formation or to promote a company. It is those persons are termed as promoters. Promoter may be 1, promoter number of promoter 2 or 3, whatever may be. But C. Patel is the promoter of Shamlal and Company. For as a reward or as a payment to the promoter, they are giving issuing share, that means Shamlal Company Limited issuing shares in the promoter quota to the promoter, to Mr. Patil. There are two types of entries here offer here. First, 1000 equity shares of rupees 10 each to Mr. C. Patil, the promoter of the company without any payment. Then any expenses incurred for the formation or incorporation of the company, it is usually termed as incorporation cost. Incorporation cost, it is not a revenue expenditure. It is a one type of capital expenditure. Expenditure is not to be transferred to PL account. It is on the some ratio or some portion year to year, it is to be transferred to PL, because the company will take benefit for this formation and issue of the shares for years after years. So when we are giving the share to the promoters, so a entry will be, or entry is to be incorporation expenses account debit to Mr. C. Patil. Then C. Patil account debit to equity share capital, and company is given 1500 share. That means C. Patil is getting share of rupees 15,000. Now we are starting entries in the books of. So it is date, it is particulars, it is ledger folio, it is amount rupees, then debit amount rupees, credit. We are doing journal in the books of, in the books of Sohan Lal and Company Limited. Sohan Lal and Company Limited, and it is the journal. First entry, Sohan Lal and Company issuing share to Mr. C. Patel as reward for the promotion of the company. So it is a part of incorporation. First, we should pass the entry incorporation expenses account debit, incorporation expenses account debit to number of that person, Mr. C. Patel. Mr. C. Patel. How much? Where? That is 1500, or company is offering share or giving share as a to the promoter of the company rupees 15,000. It is 15,000 we are give share is to be given. Thereafter the second entry, then Mr. Patel, Mr. C. Patel, account debit to equity share capital or share capital, but it is suggested that instead of share capital, it is better to write equity share capital, because share capital may be on the ground of equity share or preference share. Because there is no question of preference share, that is why you can write equity share capital also. But if those both shares are simultaneously running in the company, then we should mention equity share capital or preference share capital. So it is 15,000 and it is also 15,000. That is the first entry, it is the second entry. That is 1,500 share at the rate of rupees 10 per share face value given to Mr. C. Patel as a reward for incorporation. So incorporation expenses account debit to Mr. C. Patel account, and thereafter second entry, Mr. C. Patel account debit to equity share capital account. That means question 1 part Roman 1 is over. It is question 1 and part Roman 1. Now we are going to Roman 2. We are going to Roman 2. Then Roman 2 is the company is purchasing some assets. Purchasing asset may be machinery, may be plant, may be building, may be furniture, whatever may be. 25,000 equity share of rupees 10 each. That means 2,50,000 share they are offering or giving to the vendor. That means from which the company S.Lal and company is purchasing asset, and they are purchasing asset. They are against the purchase of asset 2,25,000. They are getting 2,25,000, but issuing share, how much? Issuing share 2,50,000. That means the purchase account when we are, that is rupees 2,25,000. 2,25,000, but share is giving 2,50,000. So when you are giving more to anyone against goodwill, and you are giving less, that is capital reserve. In the last 2-3 classes I have explained, but this case there is no question of goodwill of capital reserve. It is applicable when we are purchasing a partnership firm or a company or other business associates or others, or any type of business you purchase. If you give more against the net asset value, you are giving more, that is equal to goodwill. You are giving less as compared to net asset value, it is capital reserve. But this concept is not applicable here, because we are not purchasing any company, we are purchasing the asset of this rupees this and this. First you make an entry for purchase of assets. How much? You are purchasing asset, that is equal to 2,25,000. Then assets account we are purchasing, not purchasing business, we are purchasing asset from the vendor, 2,25,000. 2,25,000 from vendor. from vendor. You are purchasing asset from vendor account. That is, we are purchasing asset of rupees 2,25,000. But we are giving shares for rupees 2,50,000. That is why I want to say that means company is issuing share, because if in case of purchase of any business, it may be goodwill or capital reserve. We give more, we create goodwill account. We give less of the net asset value, we should transfer the balance amount to capital reserve. But in this case, it is the asset, purchase of asset. So what will be the entry? Vendor account will be debited. Vendor account will be debited. How much we are giving? Vendor account we are giving how much? We are giving share of this. That means debited by amount this, and it should be credited by amount this, it should be debited 2,25,000. The but we are giving share capital of rupees this and this to equity share capital or share capital. A share capital account we are giving how much? 2,50,000. That means we are selling the share at a discount. We are giving discount 10%. The 10% of 2,50,000 is 25,000. That means discount on issue of shares 25,000, because in case of purchasing any company, it should be adjusted either in goodwill or capital reserve. But in this case, it is discount, or if we give less, then either it will be premium. So we are debiting this amount because it is already credited, but we are giving share this portion is discount. That means we are giving 25, that means shares of rupees 25 into 10 equal to 2.5 lakhs, and but our liabilities debited this, that means this portion of share. That means vendor or the company or any association, those are providing machine or asset to them, they are getting discount of share at the rate of 10%. Now this problem is over. Now another problem here. Now we will do the problem number 2. It is problem number 1, part 1. It is problem number 1, part 2. Now we are going to problem number 2, and there may be a date column you provide or may not provide, because no date is mentioned here. That is why I am not mentioning it. Now it is date, it is particulars. It is particulars. It is particulars. It is ledger folio. It is amount rupees, debit amount rupees, credit, and the name in the books of Morgan and Company. In the books of Morgan and Company Limited. Now we are doing journal. First of all, we will go through the problem properly and then we will start the problem. First, what is the problem? Morgan and Company Limited purchase a machine. It is not related to purchase of any business. It is they are procuring or purchasing machine. So from Cook and Company Limited. From Cook and Company Limited for 8 lakhs. As per the terms, purchase consideration for the of rupees 80,000 is to be paid in cash, and the balance will be paid by issue of shares of rupees 10 per share. What entry should be passed in the past if the shares are issued? First one, under 2, problem number 2, first one, the company is paying off the rest purchase total purchase consideration 80,000 plus and the balance issuing share at par or face value, and face value of the share of rupees, where is the share value of the share is rupees, maybe 10 rupees per share. Next one, 80,000 and balance part is to be paid off issuing share at the rate of 20% discount. And third, C, 80,000 payment common for these and this. For A, rest balance or rest due is to be paid off by issuing share, equity share of Morgan Company to Cook and Company Limited by share at rupees 10 per share. Second one, the balance, that is 8 lakh minus 80,000, 7 lakh 20,000 should be paid off by issuing share of company 10 rupees at a discount 20%. Third one, the company is issuing share to, under this condition, 80,000 already paid and 7 lakh 20,000 by issuing share of rupees 10 is at a premium 20%. First one at par, second one at discount, third part is premium, and 7 lakh 20,000. This 8 lakh minus 80,000, 7 lakh 20,000 balance is to be paid by issuing share under 3. There are 3 rates: at par, at discount, at premium. Now I am going to start the journal. First, Morgan and Company purchasing. What they are purchasing? Machine. They are purchasing machine. First entry, you purchase machine, then machinery account debit. Machinery account debit. How much? The machine value is 8 lakh. So we are debiting machine, and that is a real account, and crediting the giver, that is vendor. The name of vendor is particularly mentioned here. Cook and Company Limited. 2. Cook and Company Limited rupees 8 lakh. That means being machinery purchased from Cook and Company of rupees 8 lakh. The next entry is, what will be the next entry? For next entry, we are giving some payment to them, that is the company. Which company? Morgan Company. It is journal 1, it is journal 1, is journal 2. That is Cook and Company Limited is getting 80,000 out of 8 lakhs to bank or cash. Bank or cash account. How much? 80,000. Then rest portion you have to pay. Bas, up to this we are drawing the secondary line. That means secondary line we are drawing. The temporary line I have drawn to to give a clear idea. First is this, what? Then 7,80,000 is to be paid up by shares at par of rupees 10. That means 7,000, that means you are issuing share, then first one, that means another one, another Roman 1, it is equal to at par. At par, what will be the entry? Then what? It is debited by 80, then 7,20,000. 7,20,000, that means, sorry, the Cook and Company Limited get share. How much share? How much share will get? At par. That means company is issuing share. 2. Equity share or share capital account. That means Morgan company is giving share for 72,000 shares of rupees 10. 7,20,000 is paid off. The total dues is paid off. First part in bank or cash, second part issuing share. That means 7,200 share, 72,000 share of rupees 10 is issued to Cook and Company by Morgan and Company against the purchase consideration of the machine. Now part 2, what is this? This is, we are issuing, they are disposing of the liabilities or paying off the liabilities, or they are paying to Cook and Company share at a discount of rupees this. So, what will be the entry? Cook and Company is to be debited. Cook and Company, sorry, at a discount, 20%. So, entry is this entry, Cook and Company, Cook and Company Limited account debit, because they have already given 20,000, the rest portion is to be given 7,20,000. But to 7,20,000, company is issuing share of rupees 10 at a discount 20. So, share price is 8 rupees. So, 72,000 divided by 8 equal to company is issuing share 7,02,000 and 7,20,000 divided by 8. Divided by 8 means 7,20,000 divided by 8, that is 90,000. That is 90,000 shares. 90,000 shares they are issuing to the company Cook and is to pay off the rest purchase consideration. So, capital is to be created. How much? To the share capital. Share capital account is to be created. Then how much? 90,000 into this equal to 9 lakhs. 9 lakhs share capital is to be created to pay off 7,20,000 and the rest portion, then 90,000 into 2, that means discount on issue of share, issue of shares 9,000, that is not 90,000 into 2, 1,80,000. That is Cook and Company is getting 1,80,000 discount when par the company is issuing 72,000 share When issuing a discount, company issuing 90,000 share and face value of the capital creation, and they are setting up or paying up 7,20,000 or as a purchase consideration. Also the company is getting discount 1,80,000, that is company is Cook and Company is getting share of rupees 9 lakhs at a, that means the face value of this, but they are getting at discount price. It is the part 2. Part 2. Now part 3, the company, that is 1 A, it is written here there B, and it is written here there C. This entry is common for all. This is entry, first entry, plus this, then first entry, plus this, first entry, plus this. So we have to pay the, or the company have to pay the liabilities of rupees 7,20,000, but they are issuing the share at 20% premium. Then how much share? 72,000, 7,20,000, the due. Share price 10 plus 20%, 10 plus 20, 10 into 20%, that is rupees, that is rupees 12. Number of share, that is 60,000 share. Sorry, I have make a cross mark here, no need. It is this divided by this equal to, the company is getting 60,000 shares. 60,000 shares means, that is now the how many 60,000 and premium, premium equal to 60,000 into 2, 1,20,000 premium. That is why entry will be at premium 20%, premium 20%. Then first, this company is to be debited by how much? Debited by 7,20,000, 7 lakh. That means all cases 7,20,000, 7,20,000. Cook and Company, Cook and Company account, the debited for the balance. We are paying off, that company is paying the share capital, giving the share capital account. How much share? 60,000 share of at a face value 10, that is it is 6 lakh, and premium, share premium or security premium, reserve account. How much? 60,000 into 2, 1,20,000, that is equal to 7,20,000, 7,20,000. And all cases for balance payment, that is 7,20,000, 7,20,000, 7,20,000. It is at par, 7,20,000 capital credit. It is at discount, that means 9 lakh share capital credit. It is at premium, 6 lakh share capital created. Now the class is over. In the next one class is to be given for share forfeiture. Thereafter we should switch over either cash flow or ratio analysis. Thanks all of you.